In this video, I'm going to share with you how you can stop renting and get into a home with only 3.5% down. It's a very small payment. I'm Jason Kaplan with Kaplan Mortgage Company, and I've been licensed as a mortgage broker in the state of Florida since 2001, and I've been helping people for a long time. I have a lot of experience helping people get a mortgage and getting them into homes. So today we will be talking about FHA loans. So what is an FHA loan? An FHA loan is a mortgage that only requires you to put 3.5% of a purchase price down on a home. So to tell you what the meaning of FHA is, it's Federal Housing Administration. It's the federal government, and the purpose of it is to help pretty much first-time home buyers get home ownership. That's really the whole purpose of the FHA loans. So the sweet thing for you is it's two big things. It's not only the minimum 3.5% down payment, but it allows for lower credit scores. So if you're in that situation, that's like the special sauce for this loan. Those two things together, combined really, a lower credit score and a low down payment. So those are the two things that you have that you'd want to get this loan. So if you're a first-time home buyer, it is perfect. So as a reference point, compared to a regular mortgage, home affordability has gotten like crazy. I know in Florida the average median sales price of a home is like $400,000. I'll use that as an example. So on our conventional mortgage, if you were to put 20% down, it would be $80,000. Now with FHA, they only require 3.5% down, which is great. So with that scenario, you would only have to put down $14,000. So that's quite a big difference between the conventional and the FHA. So that's really what makes it so great. The credit scores I can talk to you about real briefly here. They're just general, rough estimates. They change by lender. They change kind of over time, but generally speaking, they go down to a 500 credit score. So if you have a credit score on the lower end between 500 and 580, you would have to put 10% down. So when you hit 580 at that point, then or higher, then the minimum is only 3.5%. But really, at a 620 or credit score is where Fannie and Freddie back them, and so they're much more sellable and they're much more competitive in terms of where the interest rate is and really kind of where you want to be, is a 620. Now, if your score gets up to 660, 680, you're going to get the same deal, only 3.5% down. And you could have some things with your credit that maybe aren't allowed for on a conventional loan. And so with those scenarios and with that credit score, that's the really sweet spot of the FHA loan, because the rates can be lower around 660, 680-ish, somewhat of a credit score on this particular program than a conventional pricing. So that's definitely a good thing. So another benefit of the FHA loan is it allows for gift funds. So a gift fund means that when you go to purchase, in this example, a $400,000 home, and you need to come up with 3.5%, and say it's $14,000 in this example, that money can be gifted to you from someone else. It's got to be a relative of some kind. There's actually a list of acceptable donors, but this money is allowed to be gifted to you for your down payment, which enables you to have even less money per se to get into a new home. So the gift fund requirements on this are good. Also, FHA has favorable DTI, or debt to income restrictions, which means that they're a little easier in terms of how much do you make versus how much debt you have and how much will you have with this mortgage. So that's a benefit compared to conventional financing. So another detail that may or may not pertain to everybody, but some people have bankruptcies in the past. So you could get a FHA mortgage much quicker than you can a conventional mortgage after you file bankruptcy and your bankruptcy is discharged. It's been 2 years after that is when you could get the FHA mortgage, as opposed to a lengthier time with conventional financing. So the FHA mortgage has mortgage insurance. So that's money that's sent into the federal government, and they take that and they use it for people that foreclose, and losses is what they call them. So at closing, there is a lump sum of money that will be due that's paid to the government. However, it's financed into the loan. It's not extra cash you have, or rather extra cash you need to come into the transaction with. However, you also have to pay a monthly mortgage insurance amount, and that would depend on your loan amount. But that is required on these loans, and when you put a small amount of money down, you do have to pay mortgage insurance. So that's the downside of that. On the upside of that is you can do certain streamlined refinance transactions later on. So if you feel like rates might come down enough where you could refinance, that is a possibility if everything else matches up. So the requirement with an FHA in order to refinance it. So if you currently have an FHA loan, you buy a house and you get an FHA loan, all you have to do is make at least 6 monthly payments on time before exploring that and being able and qualifying to get another mortgage, whether you refinance, a streamlined refinance, or into another FHA, or potentially if rates come down a lot, maybe 6, 9, 12 months, maybe you can refinance into a conventional mortgage at a lower rate. So that's that is a possibility. So all in all, it's a good product. It's a very specific product. It's helpful, and what you would need to do is you contact a professional. You can contact me. You could call me or email me, and the end result of that is essentially to get a pre-approval letter. So that's what I urge everybody that's looking to buy a home get. And so that pre-approval letter means you've spoken with me. We've looked at your income, your assets, and the whole situation, and I give you a letter, hopefully, and that you are qualified to purchase a home for a certain amount of price of the home, purchase price, you're qualified for a certain loan amount, and you're qualified for a certain payment. And that letter then is given to the agents and the sellers of homes because they want to know that you're qualified. So you need this letter, absolutely. And beyond that, it just makes sense because it gives you much more, as a buyer. A pre-approval letter not only will be required when you're getting ready to buy a house, but it'll give you a better idea on how mortgages work. You'll be more educated, and you'll be more confident to know what your payment will be and your out of pocket expenses to buy a home. So give me a call or send me an email if you'd like, and I hope you learned a little bit about FHA loans today. Thank you.